My name is Omar. I'm one of your podcast hosts, and I'm also a lawyer at Treadstone Law. For most Canadians looking to buy, sell, or refinance real estate in Ontario, a lawyer is the last thing on their mind. They're busy dealing with banks, mortgage brokers, realtors, and when everything is said and done, they look for a law firm to finalize the transaction. At this stage, if something is broken, it's hard to fix. And believe me, I'm a real estate lawyer, I've seen it all. How do you gain the right help early on in the process? Speaking to a lawyer one on one can get real expensive real quick, and it's probably not the best idea. That is why Treadstone Law has launched several resources for Canadians to have access to the information when they need it the most. You can sign up for one of our online workshops or to our email list to receive information you need when you need it. This information is designed for you to be better prepared and avoid costly mistakes. And for a limited time, it's free. Visit treadstonelaw.ca/MAS offer or click the link below. Welcome to another episode of Hustle and Grit. This is a podcast brought to you by Treadstone Law. I'm your host, Umar Zulkarnain, and I'm also a real estate partner here at Treadstone. We have had a number of great guests over the last couple of months talking about different topics in real estate, and we have a really special guest today. Previously, we talked to realtors, we talked to the mayor of Guelph, we talked to mortgage brokers, we talked to a number of executives. We did not get insight into kind of the perspective from someone that works within a branch. And we have someone here that has had 20 to 25 years, I think, approximately, of experience in the mortgage industry across the process. She has a wealth of information and insight into how the process works, things that buyers, sellers, and just anyone looking to get into the market should know. And I'm excited for this conversation. Welcome to the podcast, Bali.
Thank you so much for having me.
So I kind of went. I don't know if the numbers had accurate, but I know you have a ton of experience. We went over it a little bit. So what we like to do in the beginning is just kind of get to know you better, right? So
Okay.
the idea is just understand what your journey has been in the industry, and how you got into the industry itself. So I'm going to throw it over to you. Tell us a little bit more about your career journey in the mortgage space.
Okay. So I do have a lot of experience in different areas of mortgages. Okay. I don't want to age myself, but yeah, I started pretty young. Just out of high school, actually, I was working at a bank. I won't say which bank, but it was green. Um, so I started there as just a CSR, a teller. I worked my way into see what was going on within the bank, right, within the branch. What are people's roles and what do people do? And right from then, like, I mean, coming out of university, I started working a little bit more hours, a little bit longer, and then you can see like where the I don't know, I would say the focus was on, right? So eventually I got into financing, right? I did spend some time abroad after university. I went away to the UK where I spent a couple of years working for a finance company. And finance company meaning that they were, charging APRs of over 10%, right? These are people that couldn't get loans. There were people that, coming out of finance agreements needed loans to pay off, let's say, a credit card debt or refinancing consolidations. And I was a branch manager in one of those finance companies. Okay. It was called Household Finance. I'm not sure if people would know it. If I think you would know it if you were more around the US back in 2000 or 1999, that area. It eventually got bought out by HSBC. Okay, so when I did come back, I actually worked for HSBC because it was taken over by Household. Oh, sorry, HSBC took over Household Finance. So again, still same thing. I'm working here in Canada with my own branch. Again, financing for people that are, unable to be qualified at the bank, let's say. From that, I went to which was Exceed Mortgage downtown. Again, we're talking about people that do not qualify at a bank level for whatever reason, right? It could be credit, it could be, um, you know, income, right? There's so many different reasons why a person doesn't qualify at a bank. And some people don't even know that they don't qualify at a bank. So they would go to, their broker would bring them to, let's say, a B lender. They also did some A products, meaning that, CMHC or Genworth or insured products, but not knowing that they could probably have qualified at a bank. But anyway, from there, I went to Genworth for a little while. Genworth is the insurer. Now it's called Sagen, but before it was called Genworth. I worked as an underwriter there. And now I'm on a different side, right? I wanted to get to know, what does the underwriter look like, or look at, let's say, for example, what do the insurers look at? Like we know what, as a lender, what we're sending in as an application, how we package it, but I wanted to see on the other end what that looked like. So, from there, I did move into a different role at National Bank where I was running a credit department front to end. So it would be from the minute that application came in to getting it to document fulfillment and then getting it to funding. So I was on a team where I started as an underwriter actually there and went to a management position. Um, Again, end to end process. I got to see the whole picture, right, of what your file looks like when it starts at credit to when it goes to documents, when it goes to fulfillment. And then from National Bank, an opportunity came up where I'll be honest with you, my husband was in this role that I'm in right now, and he was actually jumping into becoming a mortgage broker himself. And instead of losing all the clients that he had built for the last 15 years at the bank, I was able to jump in into that particular role as a mortgage specialist. And I'm talking almost 10 years ago now. So in that role, I got to maintain the clients that he would have lost because they wanted to stay with BMO. And we would have lost the client base. So me transitioning into this role only made sense because I did have, like I said, the credit side of things, the underwriting, and now it was just the sales, right? So getting out to meet going out to meet real estate agents, law firms, accountants, and building that business. So that's my experience. I
A,
didn't go
a,
into how many years, but quite a few years.
a lot of, I think, good experience that probably helps you in your current career as well. Just for context, I guess, for the viewers as well. You mentioned a few different terms. So you mentioned you spent some time in the underwriting process and some time in the
Yes.
fulfillment process. How do those roles, just from kind of a borrower's perspective, differ from your current role at BMO?
Well, I'm still technically, honestly, I'm still um, underwriting a deal, right? So if a client comes to me with a scenario, here's what my scenario is. My income looks like this. I've been on my job for this long. My credit looks like this. I'm still in my mind underwriting that deal anyway, right? And then when I do package that deal, I have to use all my underwriting techniques. And document wise fulfillment, I know exactly what documents these clients need to bring to me. I need, exactly know how to get around a certain document. Let's say, for example, you don't have your, I don't know, tax return. What do we go to credit with for an exception on that? Or what do we use instead of that, right? That kind of stuff. So, yeah, I mean, those scenarios, I know exactly what I'm looking for document wise, calculating your income when those documents come in. So, each role, I think, gave me a little bit more insight, a little bit more experience on what I do now.
So I guess,
Right.
despite having kind of like from a borrower's perspective, they're coming to you, I want a mortgage, and you're collecting documents and you're assessing the risk profile perhaps and their affordability and how to kind of determine whether the bank will accept the loan and how to kind of where the strengths of the candidate are, right?
Yeah,
Eh,
before I actually put an application in the system, like you don't want to have your credit pulled for no reason. You want to make sure you actually go through the application before it enters the system, right? So I want to look at your documents ahead of time. I want to be involved before you even go and, let's say make that offer because I want that buyer to be absolutely 100% confident that they're able to do that.
So from a borrower's perspective, I guess it benefits them to have a mortgage specialist or mortgage broker who has some kind of underwriting knowledge and expertise, because then when it goes to the actual underwriting department, it's less likely to be rejected. Am I
That's right. Yeah. And you don't and here's something for any buyer anyway. You don't want to have multiple applications at multiple lenders. Okay. Because you know, doing that, your information changes. It's like that telephone game, right? Information changes as it goes through the system, right? So you want to make sure when a client comes in, they're having the right conversation with the right person in front of them to give them that correct path, let's say, right? If you came to me and said, listen, my income looks like this, and this is what happened, then I'm going to say to you, this is what you need to do to repair that, or this is what you need to get yourself back on track, right? And I think any right broker or right mortgage specialist would be doing the same thing for those clients, right? One, we don't want you to lose your deposit, right? But we also want to get you approved. Right,
makes
so
sense?
get involved, if even if their buyers are thinking about getting into the market, go have those conversations first.
Makes sense. So in terms of a specialist for about 10 years, and then a ton of experience before as well in the industry. Would you say the
Yes,
industry has changed since you started?
it's always changing, right?
Any particular way?
It's always changing. Like I've seen these rates right now are on the rise, but I've seen similar rates, maybe 10 years ago, let's say, for example. The government, when they get involved, obviously they change the rules all the time for us, right? So we're constantly changing the rules. So I think when that test came in, maybe say about 4 years ago, I think 4 to 5 years ago, everyone thought, oh, the stress test is going to throw a lot of buyers out. But funny enough, it just kept going. Like people were still buying, right? There's always, I think, changes, but I think there's always ways around it, right? Like we have to think that, you know, okay, yes, the rules change. Yes, buying changes, selling changes, but so does everything else, right? Like everything is it goes in waves. I'd like to say it goes in waves.
Makes sense. So in line with that as well, I guess, what makes for a good mortgage broker?
Experience. 100%. Know the products that, let's say for like I'm not a broker of myself, I'm a mortgage specialist. I work only for BMO, right?
Hmm.
You want to deal with somebody that knows what the banks offer, know what other lenders offer. And you need to know that because let's say, for example, I'll give you a perfect example. BMO has a wonderful New to Canada program. Okay. We know on the market, not a lot of other banks offer the same products, right? So let's say, for example, client comes in and they are new to Canada, and your broker doesn't tell them that they could do this, then they're missing out, right? They're missing out on a product they really could have had. And same with like, new to
Hmm.
Canada or new first time home buyers, right? You want to make sure that people know what products are available for them.
Just the nature of a service business too. Same, I guess it's kind of similar in the legal industry as well. With that experience, you get a stronger understanding of just the what you're working with, right? And the tools you have available to solve the client's problem. So
That's right.
what if a client wants to hire a Bali? What do they do? What's the process look like?
You just contact me. Give me a call. Say, I want to just discuss, just give me, I'll have a scenario for you. That's the best way, right? They say, listen, here's my scenario. My scenario is my income looks like this. This is what I make per year. My wife works or my husband works. This is our, household income. We have some issues with credit or we have some debt that we consolidate. What do you think we could do? Or how much do you think we can afford? Right? It's just a conversation. There doesn't have to be a credit pull. It doesn't have to be, anything formal. It's just get you to where you want to be and how you're going to get there.
Good advice. And how can they contact you?
Oh, sorry. Yeah.
Yeah, what phone number, email? It should be below. Phone number is the best way to contact you.
Phone number. Yeah, absolutely.
Yeah.
And then even if you go online, you'll find me. under BMO, the mortgage specialist. My email address is there. You can send me a quick email as well. Same thing. Let me know how you got my name and number from this broadcast, or a friend referred you, whatever it is. Just let me know, and then from there, I will uh, advise you the best I can. Right?
Sounds good. Okay, so that kind of concludes our first portion. So now I want to move into questions related to the real estate process. So common questions that buyers, sellers, people refinancing might have. Just cover issues so that Canadians can avoid mistakes and make the right decisions in the process. So the first thing, I guess, so buying real estate is not something people are doing every day, right? So it's something you do maybe once or twice every 10 years, maybe sometimes faster now with this current industry. Now, it's natural for buyers to not understand the process. What do you think is the biggest mistake first time home buyers make when it comes to the financing process?
In this, the problem right now that everybody I think is having is that these prices are extremely high, right? It is taking a lot of people out of the market, right? So, there's a knee reaction that happens, right? People think, oh no, prices are going to go up again. We better jump in. We better do this. We better get it now. I like to say yes and no. If you want to get in, it's better to get in sooner than later into the market, but don't jump in just because. What if you can't afford that home? Like there's so much after that purchase, all the things that happen after that, or all the costs that happen after that, right? They really need to take into account, is it affordable, right? Or do you need to save for another 1 or 2 years, right? Um, is there, how if one of you were to lose your jobs, or you were to lose your job, what happens afterwards? I think they need to look at their contingencies before they jump into the real estate. I'm not saying don't jump in, absolutely not, but you just need to make sure you have the plan for afterwards as well.
Makes sense. Have more of a comprehensive kind of idea of your financial situation, and that's where having
Yeah.
a good mortgage specialist or broker comes in as well. I've found in our experience, we've seen a lot of buyers getting in maybe in over their heads, and then they end up having to refinance or sell, or get into not as kind of not so great financing products from private lenders, perhaps. So definitely,
Yeah.
I think good advice. Just making sure that you know your financial situation, you understand your contingencies. Speaking to a mortgage specialist, speaking to someone that can guide you to be able to prepare for that big decision.
You know
Now,
what? Like mortgage brokers don't offer pre-approvals. That
mhm,
from my experience, sorry, from my experience, what I've been told and what I've heard is that they don't offer a pre-approval.
mhm,
The banks do, right? Most banks will offer you a firm pre-approval, meaning they do pull credit checks, they do look at your income. Do it. Do a pre-approval. Just don't fall into that. The broker said I could do it, but then afterwards can't get that mortgage done. Do the pre-approval, have a letter in your hand. Now you can buy with confidence.
100%. And I have so many stories where we get files where maybe the client was promised a financing by a broker, and it comes to our desk, and then financing falls through a few days before closing. Clients panicking. Now they're looking for a new source of funding. So I think that's 100%. That's something that people should be considering.
Saying
Um,
don't use your broker. Absolutely. If you want to use your broker, I would never say don't use
mhm,
the banks over your broker. That's
mhm,
not what I'm saying. I'm just saying you want to make sure you have that pre-approval in your hand.
mhm. So when it comes to affordability, that's a big issue. Prices are rising. I guess they've
Yeah.
stabilized somewhat now. Do you have any advice for buyers in terms of affordability?
Buy with ease, absolutely. It's great to have that $2 million house, but if you can't afford that $2 million house, and you're constantly worrying about making those mortgage payments, is it worth it? Right? Start small, build equity. Right? That's the best thing for anyone to do getting into the market. Start small. You know that values are going to keep increasing. You're building equity as you go along. Now you'll have a lot more to put down on that next property, right? There's nothing wrong with going in steps. Just don't do that big jump if you've never bought a home before.
Do you find clients are do you get clients who are kind of just, I want a 5 bedroom house, but my budget
That's
doesn't
right.
warrant it, but that's what I want. And then they
It's
kind of wait and then
Omar, we got people that are a two family household and you're buying a house that has 5 bedrooms. I get it, maybe you have extended family and all that kind of stuff, but do you really need that? Is it because you're
Mhm.
building equity and then you want to sell that house? You can't guarantee where those prices are going to go, right? You may not make your price back or value back. You may, right? It's a gamble that as long as you're willing to take that gamble.
And I think it still is a gamble despite um, the kind of the typical conversation over the last few years has been you can't lose. It's real estate, you can't lose. But it's a cyclical industry. So yes, for the last 5-10 years, people made a lot of money. There's going to be a downturn, but then there'll be an upturn again too. So I think it's having a longer term horizon. Like you mentioned earlier, right? You have the backup plan, and are you kind of sure about the next 5-10 years? You can stay put, and then you'll be fine, right? So
Well, we always see it, right? Whatever goes up always comes down, right? That's just the way it goes. But it's not to say it won't go back up again, right? So even
exactly.
even with the values, I don't think that they're going to come down. Personally, I don't feel that anything is going to drop. I do feel that it may stabilize, slow down a little bit, get to a more reasonable type of buying, selling. Um, but I don't think it's going to drop. The minute it drops, my personal opinion, minute it drops, even just slightly, you're going to have investors jumping on those properties,
Yeah, I guess
right?
people waiting to, yeah.
Yeah.
And with the amount of cash they've printed over the last couple of years, that cash is just sitting there to inflate the market further. So it's some of I guess some of the economists that I've been listening to have been saying that we're past the cycle and we're going into just an upward trend. But
Yeah.
makes sense. So when it comes to investment, so you mentioned investors. Is there any mistakes that
Yeah.
investors make that they can avoid?
I just want to make sure, like when you are buying a property for an investment, let's say for example, right, uh, that you're actually going to come up on top and not in debt, right, for this property. Is it resellable, right? What's the marketability on those properties? A lot of people are bought those condos. A lot of people are buying into the condo market, and then what happened with COVID? No one expected COVID to happen, right? But a lot of these people walked away from those rented condos and went home. So, I think nobody saw that coming. So I think that's something that people need to take into account when they are investing in real estate, right? Where you're renting, will it always be rented? Who are you renting to, right?
Did
I
you
mean, foreign investors came in and they bought these properties and, to live in or not to live in, but they've made their money on these properties because the values went up so high. Right? So I again, it's I don't have an insight. I just think that investors, I think if they've been doing it for a while, they know what they're doing, right? If they're new into investing properties, talk to your real estate agent. Just make sure that that property that you're buying as an investment, if is going to be, you know, um, rented constantly. Is there a demand for it, right?
make
I
sense?
think I
And
answered your question.
yeah, no,
Sorry.
no, it definitely answers the question. I think it's like because you mentioned a few things. You mentioned looking at stability of rent, looking at the area, or speaking to your realtors, picking the right property, and then I think on the other end you also have considering your costs. So what are your total costs for purchasing this property? Maybe you're a first time investor and you're looking to buy a condo to rent it out. Make sure that it's in an area that will be easy to rent, but also look at what can you afford and what will be your total cost that you have to put into this property, and to make sure that you can recover that from the increase in equity as well, right? So I think that's definitely good advice for, especially if you have someone. What I find is often when it's earlier first time investors or even second third properties, there's that hesitancy. What do I do? What do I consider? What are the factors I should be looking at when I'm looking to make an investment decision? Um, so generally speaking, so whether you're an investor, first time home buyer, repeat buyer, what are certain steps that you feel anyone should be taking to ensure a smooth financing process? What should they be doing? Anything in particular? Maybe perhaps before reaching out to you or while they're speaking to you?
Well, there's so many websites that you can get onto, right? You can have a look and see, CMHC for one of Canada Mortgage Housing Corporation has a wonderful website where you could go in and do a little bit of a payment calculator, right? Is it affordable to you? So let's say you're putting 10% down or whatever it is, or go online and look at other mortgage calculators. Go and see what your monthly costs are going to be. Is that something that you think you can afford? Now you've got a range of, what you're looking to buy for, how much you're going to buy for. Get on to the realtor websites, have a look and see what do you think, is going to be within your means. Is that, even out there, right? Because if you come in now and say, I want to live in Mississauga, but I only want to spend 600,000 on a house. Well, you need to know that that's very unlikely, right? Um, is that, something you can do? So if not, have a look at a different area. Get a realtor involved, even if it's just to have conversations, right? Or get on and do your own information on. There's so many tools available online that you can have a look and see, what am I looking at? Is it even possible? Get your parents involved if you're a first time home buyer and you're young, right? I mean, parents have a wealth of information themselves, right? They can pass on to you, or, look at your down payment. Really, where's your down payment going to come from? Do you have enough down payment, right? These are the questions that people should be thinking about before they even get into the market. Like, you want to buy $1 million house, but you don't have, you know, $10 in your bank account. I think you need to reconsider that, right? Look at what's realistic. I think it's really what people need to look at.
You mentioned down payments, making sure you have enough of a down payment. So, what I guess for someone, let's say, that doesn't have enough of a down payment, but has high enough of an income to service a mortgage, what does that look like? What's the process look like for them?
So, I mean, depends on what they're looking. I mean, remember, if you're putting less than 20% down, you have to pay the insurance premiums, right? CMHC, SAGE, CGI. You're going to have to look at, like, there's no way around that. There has to be some sort of a down payment. You're going to either have to borrow it, or I don't like to say borrow, gift it from or have your parents gift it to you. But there has to be, again, you cannot buy if you don't have a down payment. And the way the rules have changed is if you're buying for 500,000, okay, you could put minimum down of 25,000, right? 5%. Anything over that 500 up to 999,999, you have to put 10% after that, right? So up to 500 is 5, and then anything after that is 10%. And
Okay, and
again,
then
you
yeah,
can't have that borrowed funds. Like, you cannot borrow it from a private lender or your line of credit. That has to be, you can have gifted. I won't say you can't have gifted, but it cannot be borrowed funds. So a client does need to have a down payment of their
and
own or gifted.
mhm. And then they'd also have to get that insurance, which can
Yeah.
be
So
quite hefty, right?
well, that's what the premium calculators are for if you go online. But what I'm saying is, a client, even if they have income to service it, it doesn't matter. They still have to have that down payment.
If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer to your signing appointment, everything is done from the comfort of your own home. No need to take time off to visit a lawyer's office for your signing when you can complete everything from your living room table. The best part is you don't have to pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us today. Enjoy the podcast. Makes sense. And keeping in, I guess, just for context, so that insurance, Bali mentioned, you can go on the CMHC website, calculate exactly how much your insurance will be based on the purchase price and the down
Down
payment that
payment.
you'll be providing. But also keep in mind you'd have to consider your closing costs as well. So maybe you have $50,000 cash in the bank or $100,000. You have to take out your land transfer tax. You have to take out your closing costs, and then the remaining portion becomes your down payment. And then from that, you
Yes.
calculate your insurance.
So the bank will be looking at 1.5% on top of your down payment
Okay, there you
to
go.
make
Yeah.
sure that you have it. Yeah.
So deduct 1.5% if you're using that calculator, or Bally can walk you through it and kind of guide you as well, obviously, in that process. So you mentioned earlier new immigrant programs at BMO. So let's talk a
Yeah.
little bit more about that. What Tell us about the program, and then what are the challenges that this program is looking to address for immigrants?
So this program is just okay. So there's a couple of programs, right? There is one that is with the insurer as well. That's just basically you're new to Canada, you have income, you may not have credit, let's say right away. So if you're here within the last 5 years and you have income but no credit, CMHC, I believe it's Genworth actually, has a program that you can buy, right? Again, not using credit, right? You can't have bad credit. Let me say that. You could have limited credit, okay? And you could do the regular guidelines, right? You're buying, 5% down or up to 15%, 20%, sorry, up to 50. Sorry, I want to do this right. So if you buy, let's say, for example, just trying to think of this program, up to 20%, you can do it insured with limited credit. Okay. But you still need to have income in Canada. Okay.
Okay.
The flip side is BMO also has a different program. Now, this is just specific to BMO. Okay. Um, Whereas if your income, let's say, is from foreign sources, so for example, you're living here as a new immigrant, PR card less than 5 years, but your income is from overseas. So let's say you're working online remotely. Um, I'm just going to throw out, let's say, China, and you can confirm with a job letter and a recent pay stub and a year-end pay stub. Um, and your down payment is here in Canada, you can do that with 35% down.
Interesting.
So as I
So
said,
are you?
it's
Yeah.
different
Yeah.
scenarios for different cases. I don't want to generalize it because we do have gray areas, okay, where you would fit. So this is where I would say, come to me and tell me, do you have income here or do you have income abroad? And that's the program I would fit you in, right? We try to customize you to where you belong.
Okay, and then the other end, if you don't have enough credit history as well, you guys can kind of accommodate that as well.
Well, yeah. So let's say again, I mean, ideally, what we're seeing right now is people are coming in from other countries. They do have jobs here, but they have no credit. They have minimum down payment, and that's perfect for us, right? That's due to Canada under CMHC or Genworth program. That's perfect. If you don't have income here, you may have income abroad. Let's say you run a business abroad. Those are perfect examples. Again, your PR has to be less than 5 years, but if you can confirm with tax returns for that business or job letter pay stub for a salaried employee overseas with 35% down, we can do those deals. And we see a lot of those deals.
Really, people
A
working
lot.
abroad and moving
People
here.
working
That's
abroad, they
interesting.
have businesses abroad, um, and their plan is to come here and live here full time, but they haven't given up their businesses or their jobs at this point. But they are here. They do need to be here. I need to emphasize that they do need to be here, right?
Interesting. So, I
A,
guess so. To
a lot
recap,
of
then.
yeah, a lot of lenders are leaving this program. Just so you know,
Okay, so you guys are one of the last
we are
offering the program.
still offering this program. Yes,
Okay, so if you're an immigrant, limited credit history, or working abroad, then BMO has kind of some solutions to help you get into the market and buy that property as well. And the down payment really depends on the program itself as well.
that's right. Yeah, exactly. Again, we also have a non-resident program. I can't say how long we'll have this non-resident program because It's one of those, again, let's say you're on a work permit. You're considered technically a non-resident, even though you're here and you have income. We do have programs for those deals as well. So, like I said, every situation, we need to look at it and dissect it and have a look and see what works best for you. And I can tell you right away, as soon as you come to me, just call me, say, here's my situation. I could say, this is something that people would entertain or people would not entertain. It's better to have that conversation, I think.
Makes sense. So I guess that covered some good insights. Actually, you mentioned something earlier as well. I wanted to talk about. You mentioned that sometimes when you were working at the B lender downtown,
Yeah.
Seed Mortgage, you found that sometimes clients would come in and they may have qualified for an A lender, but for whatever reason they didn't know and they ended up with a B lender. How can clients avoid that kind of situation? How can people avoid that kind of situation? Is there anything they can be
You-
doing?
Who are they talking to? That's the main thing, right? You need to make sure you're talking to some. I would say, even if you didn't come to me, okay, talk to somebody at a bank and give them your scenario to say, is this something that the bank would entertain before you go and commit to a B lender, for example, right? Brokers can go to banks 100%. They can go to TD, I believe, Scotiabank. Sorry, I think that's the only banks they deal with. I could be wrong. Don't quote me on that. But uh, talk to different people. How about that? Before you make a decision on who you're going to deal with, talk to different people to get an idea. Um, and make sure that they're not pulling credit bureaus in every place that they go to, but have conversations with. Say, yeah, this is my situation. Is this something you could do? And if I say no, then of course go to somebody else. Ask the same questions, and maybe do your own research before you have to go to that B-lender.
Makes sense. And that last comment you mentioned, just make sure that you're not getting your credit pulled at each
Yeah,
time that you're speaking to someone as well, because that will ultimately
yeah.
impact your credit as well.
I think you need to have a relationship or know the person you're dealing with, right? Like I say, if I was to, go find a contractor off the website that's there, I don't know his work. I don't know if he's going to rip me off. I don't know if he's in it just for the job and he's really not going to do a good job. Do your research. Go talk to a few people. If they're giving you that same sort of uh, answer or response, then you kind of have a general idea where you're going, right? But I want to be able to trust somebody. So even word of mouth, right? If you're going to deal with a broker, do you know people that have dealt with him before? You don't know me. Maybe you could see, again, you need to build that relationship yourself, right? Talk to them, get an idea of what you're looking at.
Yeah, and that's part of the kind of the idea behind why we launched this podcast as well, getting real advice from you guys, from specialists, from mortgage brokers, anyone who's in the industry,
Right.
and can really provide you that insight instead of you just kind of running in the dark,
Yeah,
right?
exactly.
So moving on, I guess, to our last portion of our podcast today, I wanted to talk a little bit about the market. So there's been a lot going on. You had the uncertainty with COVID, then we've had the recent rate hikes, and then
Yeah.
now we've had some stability in the market as well. How can buyers prepare for this real estate season, or do you have any advice for buyers in this real estate season?
You know what? I think that from what I'm hearing, okay, that there is going to um there's a shift in the market, obviously, right? But I am hearing from realtors that I deal with often to say that, you know, their buyers are actually having opportunities to buy now, whereas before they were outpriced, right? Or they were outbid. They're actually getting to a point now where some people don't want to pay these rate hikes, right? So some people buyers are buy right now. So investors, for example, right? If you have like, rental property after rental property, because the rates were so low, this was very enticing to these investors, right? But now they're not so enticed because they're not going to make that same sort of income they were making before when the rates were low. So they're kind of shying away from buying these properties. So now we have first time homebuyers, people that actually want to live in these properties, out looking, and their their offers are actually being accepted at this point, right? So it is a good time to buy. It's not, you're not going to get outbid like you were before. Let's say, I was hearing people are going in and there were 16 offers on the table. There was no way these poor people are going to, be able to get into this market with 16 offers there, right? Now, I think they're seeing maybe two or three offers on the table. So it is a better time for people to buy if, you were being outbid all the time before.
Nice. Yeah, and I remember when I mean not too long ago, even last year, a lot of buyers going through that experience, and it's an emotional experience too, right? You're going in, you find that house, and you're putting in a
Yeah.
firm offer. That means you're ready to buy this house, and then you don't get the property, then again and again and again, and it becomes stressful and emotional. I think now with the real estate market kind of stabilizing, that does provide an opportunity for those buyers that can get in the market and finally be able to buy that home.
Well,
Um,
you're not going, before they were going at least 100,000 over asking or 200 over asking. What we've seen and what I've heard on the radios and the news and like, little things that you read here and there is that some of them are not going over anymore. They're actually getting what they're asking for, right? So we're finding that, well, what I'm hearing from, like I said, other real estate agents is that sellers now are taking their homes off the market because they're not getting that overrated price that they're looking for, right? So there is that little change that's happening, right?
so in terms of kind of uh, I guess a number of factors influencing it, the recent
Yeah.
rate hikes. Do you think that the interest rates are going to be hiked again?
Yes, absolutely. That's all the buzz. I mean, I've seen like, what, the rates haven't moved in so long, and now all of a sudden they're going every other day. I see a little bit of a adjustment in the rate, right? Yes, rates are still on the climb, right? They're going to continue for a little while at least. And I think until things stabilize, actually stabilize, those rates are going to continue to go for a little while.
And would you recommend buyers be kind of leaning towards fixed or variable rates, or is that kind of
I wouldn't lock into a fix at this, right? Variable still is lower and it continues to always sort of outperform that fixed rate. Uh, if you're getting into the market, go with the variable, it's still lower. And again, if rates do drop, you can always lock that variable in at that time when the rates are a little bit lower. Right now, you're going to lock in at over 4% and you're stuck with that for 5 years, right? If you go with a 5-year rate, whereas a 5-year variable, let's say today paying, I don't know, let's say 2.2. I'm just jumping on a number. And tomorrow the rates drop down to 3%. You could lock in at that time, right? Still, it's time to lock in. Whereas and again, with the variable, the biggest difference is, let's say, for example, you do buy this house and you lock it and you decide that, oh my God, this is not the house for us. I don't want to be at this location. I don't like my neighbors. You're going to get a penalty for breaking that fixed rate, right? And usually, sometimes it's pretty high. With a variable rate, let's say you break that, it's only ever 3 months interest or the interest rate differential, whichever is higher. But 3 months interest compared to that interest rate differential is you know, a better
so?
a better one, let's say.
Generally always makes sense
Yeah.
for a variable rate, right? So in terms of affordability, or more, I guess, getting a mortgage approval with the kind of current rate environment, are you finding that it's becoming more difficult, or is it kind of about the same? How is that right now?
I think it depends, right? Like you said, it depends on everybody's situation on how that approval is. I mean, if it's, your income is good, your credit is good, there should be no issue as long as you're buying within your means, right? Uh, what we're finding is that it's getting more difficult to approve people because they're buying way over their means. The affordability becomes an issue. You're getting everyone trying, but it's like I said, I mean, the guidelines have been there for a while. It's either you qualify or you don't, right? And the gray areas, BMO is very good at looking at the overall picture uh, and seeing what we can do for the client. I mean, the only time you really get a real hard decline is if affordability is an issue and it's extremely high, or credit is a big issue, right? There's gray areas. I like to think that BMO looks at those gray areas and sees the overall picture, right? Um, and I think most banks do the same thing, right? They look at the overall picture first to see, is there something we could do here?
Makes sense. A lot of great insight. I think we covered a lot of good topics that are very relevant for whether you're buying, you're selling, or you're looking to refinance. I think a lot of that, the topics we covered, would be very helpful to understand before starting the process. Like Bali mentioned earlier, do your research before you start the process, right? Know what you're getting into, know what you're going to do, and understand, get as much knowledge as possible so that you don't make those mistakes that can end up being costly for you in the long run, right? And speak to several people, whether it's your different specialists or brokers. Speak to your lawyer as early as possible is what I would recommend as well. Just so you know kind of what to expect as well from the legal end, and you're prepared, you're not making those mistakes that are going to cost you a lot of money in the long run. The goal here is minimizing those mistakes and minimizing the associated costs with those mistakes. Now, before we end, I just want to kind of one more time recap. So, if someone wants to get in touch with you, Bali, what can they do? What's the process like? And then, if you can tell us what number or email they can reach you at.
So my mobile number, I believe, is on the bottom there. It's four
Yep.
one six 728 4822. Yeah. I mean, call me. I mean, like I said, I'm mobile, so that is my cell phone number. You can email me. You can have a look on the website. You'll find me under BMO to contact a mortgage specialist. My name is there, so you can find me there. You can email me. You can call me. Um, Again, let's just have a conversation, right? I'm not going to promise you what I can't do. I can promise you we can look at it and see what works best for you. If we don't offer, I will tell you upfront, I'm sorry, this is not something we can help you with. We do also, I just wanted to mention, we do also have a partnership with a brokerage. It's called Spectrum here at BMO. So if there's something I can't do, I can always reach out to them and see, is there something that they could do? Or, what are your options? I always look to see and say, what are the client's options? I will never leave you with no option at all. I will give you, you know, here's your options. Maybe you need to go back and save. Maybe you need to get a gifted down payment. Maybe you need to have a co-signer or a co-borrower, or, and that's what you need to look at, right? Have a conversation, see where you're headed before you jump into the real estate market.
Awesome. Thank you for joining us, Bali. It was a
Thank you
pleasure.
so much for having me.
That's a wrap. Thanks for joining us, everyone. Have a good one. If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer to your signing appointment, everything is done from the comfort of your own home. No need to take time off to visit a lawyer's office for your signing, when you can complete everything from your living room table. The best part is you don't have to pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us today.